I'm delighted to welcome you all to Knowledge Session 4, Vipanana, GST, Global Tariffs and Indirect Tax in a Disrupted World. In today's evolving global economy, taxation extends far beyond borders. With digital services, global tariffs, ITC disputes, and technology reshaping trade and compliance, the indirect tax landscape is witnessing significant transformation. This session aims to provide meaningful insights into managing taxation in a dynamic and interconnected world. Adding to the spirit of today's event, a blood donation drive is also being organized at the dining hall. The gift of blood is the gift of life, and we sincerely encourage all those willing to contribute to come forward and support this noble initiative. Your small contribution can make a meaningful difference and help save lives. As a token of appreciation, three lucky donors will stand a chance to win attractive prizes collectively worth Rs 15,000. In addition, all delegates are requested to be present until the conclusion of the program, as a lucky delegate draw with a cash prize of Rs 10,000 will be conducted. Please note that only delegates present at the time of the draw will be eligible to claim the prize. With these exciting announcements, let us now move forward with the session. We are privileged to have CA Joystan Dsouza as the session chairperson. We are also honored by the presence of our distinguished paper presenters who will share their perspectives on this dynamic area of indirect taxation. I now request CA Gaurav Hegde, Chairman of Mangaluru branch of SICASA of ICAI, to escort our esteemed chairperson of this session along with the paper presenters to the dais. Sir, it is my privilege to introduce the session chairperson, CA Joystan Dsouza, a practicing chartered accountant associated with Nitin J. Shetty & Co., Mangaluru. He specializes in litigation across both direct and indirect taxes and is widely known for his passion for teaching and mentoring students in subjects such as GST, audit, and strategic management. An alumnus of St. Aloysius College, he holds a degree in commerce along with a postgraduate diploma in investment management and pursued his articleship at Prasanna Shenoy and Associates, Urva Store. He served ICAI as the Secretary of Mangaluru SICASA for the year 2022-23, during which the branch earned national recognition as the second best CA Students Association by ICAI in Delhi. The national achievement was also recognized and felicitated by SIRC of ICAI in Bengaluru. A distinguished speaker and academic contributor, he has addressed students across numerous ICAI branches throughout the country. Was honored as the best paper presenter at the CA Students National Conference in Ludhiana. Presented papers as a student at Ghaziabad, Mumbai, Mangaluru, and Udupi, and has published more than 25 articles in student newsletters across all 5 regions of ICAI. With his rich professional experience, dynamic personality, and deep understanding of the subject, we are truly delighted to have him as the chairperson for this enlightening session today. Please join me in giving a huge round of applause and a very warm welcome to CA Joystan Dsouza. I now request CA Bala Subramanya N., Secretary of Mangaluru branch of SIRC of ICAI, to hand over a token of welcome to CA Joystan Dsouza. Thank you, sir. I am now delighted to introduce our esteemed paper presenters who will be leading us through insightful discussions. Our first paper presenter, Mr. Somyadip Chakraborty, will be unveiling his research from the paper titled Impact of Global Tariffs on Businesses. Hailing from Guwahati, he is an active participant in conferences and national talent search programs organized by ICAI. He has been adjudged the best paper presenter on 2 occasions at Chennai and Guwahati and has represented the Guwahati branch at regional level competitions multiple times. He also enjoys singing and listening to music. Our next paper presenter, Ms. Chrisanne Monis, will be presenting on the paper titled Common ITC Disputes and How Courts Are Deciding Them. She is from Udupi and is currently pursuing her articleship at Nitin J. Shetty & Co. Mangaluru and is presently in the 2nd year of her articleship journey. She completed her BCom from Trisha Vidya Evening College and was honored with the Principal's Excellence Award in Academics for securing the highest aggregate marks across all semesters. Beyond academics, she has a keen interest in music and arts and enjoys singing, dancing, mandala art, and reading books across various genres. Our next paper presenter, Mr. Preetham, will be presenting on the topic GST on digital services and cross-border transactions. He is from Udupi and is currently pursuing his articleship at Kamath & Co. Udupi. He completed his schooling at Silas International School, pursued his PUC at Poona Prajna College, Udupi, and graduated from Poona Prajna Evening College, Udupi. Apart from academics, he enjoys singing and listening to music. Last but not the least, we have Ms. Mizbha Nayab from Coimbatore, who will be presenting on the paper titled Role of Technology in Trade and Customs. She is currently pursuing her industrial training in the investment banking domain at HSBC Bengaluru after completing her articleship at GGA Associates. She previously served as a secretary of SICASA Coimbatore and has actively participated in various student initiatives, paper presentations, and public speaking activities. She has also ventured into content creation, where she shares insights on the CA journey and mentors CA Foundation students. Let us welcome our talented paper presenters with enthusiastic applause. I now request Sara Heba, member of the Mangaluru branch of SICASA of ICAI, to hand over a token of welcome to the paper presenters. Thank you, Sara. Let's get started with our first topic without further delay. Our first paper presenter for the session is Mr. Somyadip Chakraborty. The stage is yours.
Very sector specific. Namaskaram Mangaluru. My name is Somyadip Chakraborty. I am a CA student from Guwahati, and today we shall be discussing about the impact of global tariffs on businesses. Now, what are tariffs? Tariffs are nothing but taxes imposed on the import of goods. And they are not a thing of today. They have been imposed since timeless age and have been used as an important tool of economic policy, whether to raise revenues for the government, whether to protect the domestic industries, or whether to signal geopolitical intent. Even in the contemporary era, they have been used as a powerful tool to balance the power of economy between nations. As per a recent World Trade Organization, that is WTO estimate, 11.1% of the global total imports amounting to 2640 billion US dollars were impacted due to the tariffs imposed between October 2024 to October 2025. As a reference, the figure was less than 4 times in the corresponding previous 12-month period. What started as a simple trade dispute between the US and China has taken the shape of a global economic phenomenon. So what's on our plate for today? We shall discuss about the different types of tariffs, what are their impacts on businesses, what are some of the recent developments in the world of tariffs, and finally, as chartereds and future chartereds, plus businesses, what should we learn to give a strategic response? Firstly, the types of tariffs. Well, this is a very theoretical part, so we are going to skip it, this being a post-lunch session. And we can definitely refer the paper published in the conference brochure. Now coming to an important concept of the most favored nation by the WTO. It means that if you are a WTO member and are extending any tariff benefit to any other WTO member nation, you need to extend it to all others. No partiality. Unless there is already some free trade agreement or exemption that exists. Now, there is a very famous proverb which goes like, when America sneezes, rest of the world catches a cold. The Trump administration's tariff policy was seen as one of the most stringent in recent times, and it unfolded in the following manner. On the 1st of February, the US imposed tariffs on Canadian imports and energy. Now Canada retaliated with import duties on US goods in the month of March. Sectoral tariffs, that is, tariffs on new sectors such as electric vehicles, automobiles, aluminum, steel were imposed, which surged the manufacturing cost. Again, in the month of April, Trump announced global comprehensive tariffs and reciprocal tariffs for several trading partners. And this time, China, European Union, and others prepared for retaliation. Then finally, in the month of May, the US-China trade war broke out. And you won't believe the tariff on Chinese goods in the US reached 145%. And China definitely retaliated with 125% duty on US goods. Then again in the same month, they, US and China, entered into a 90-day temporary tariff reduction plan. And again in the month of July, Trump threatened several countries, including us, that he'll impose tariffs. Then finally, as a relief in the month of August, the courts of the United States ruled Trump's tariffs as invalid, and this came as a major relief for many industries. And finally, as of late 2025, more industries were given such reliefs. Do you know what's the latest development in the world of tariffs? Have you read the newspaper 3 days back? Yes, you heard it right, 3 days. Just 3 days back, the Trump administration has again imposed a 12.5% tariff on India and 59 other nations with an allegation of forced labor that is rendering the American workforce less competitive at the global level. However, India has stated that they are still under talks, and this is not final. Now the impact of tariffs. Firstly, the manufacturing sector. There are multiple impacts. Input cost escalation. When the Indian government imposed safeguard duties on cheap Chinese and Korean steel to protect Tata Steel, JSW Steel, Steel Authority of India, downstream industries such as automobile manufacturing and construction faced significantly higher manufacturing cost. Secondly, supply chain disruption. Let's talk about Apple. We all know Apple had its production base in China. So when the US-China trade war broke out, cost of producing iPhones in China was automatically, drastically increased. Now, Apple had to step up its India policy by entering into an agreement between Foxconn and Tata. And we all know about this already. As of 2025, India accounts for about 14% of the global total iPhone production, up from nearly zero. And finally, the reshoring and investment decisions. Do you think the capital budgeting decisions can be taken overnight? No, right? These takes months and at times years. So, due to this extreme volatility, businesses delay capital expenditure, they delay hirings, and also hold large amounts of inventories so as to act as a hedge. And all this contributes to nothing but slowing down of economic growth. The pharmaceutical sector. When the US-China trade war broke out, Indian government provided a production-linked incentive scheme for 41 active pharmaceutical ingredients, that is APIs, to bolster India's manufacturing capacity and at the same time reduce import dependence. Agricultural sector. This is one of the most politically active sectors. In the recent UK-India FTA, that is free trade agreement, UK has sought for lower tariffs on Indian agricultures, and India in return has sought for better access to textiles and pharmaceuticals. Energy sector. Indian government imposed a 40% basic customs duty on solar modules and 25% on solar cells. But at the global level, this was not good. Why? Because these Chinese-produced solar cells and modules were extremely critical for transitioning to green energy and renewable energy, and this was halted. And finally, the SMEs. Do you expect a small and medium enterprise to have the same amount of cushion against tariff changes as a Reliance or a Tata? Absolutely not. Right. For example, take a small textile manufacturer. His main business is exporting to the US. When the US imposed duties on Indian products, do you think his products can compete at the same level as against other countries against whom the US government has not imposed any duties? Think for yourself. Finally, strategic responses for CAs and businesses. Supply chain diversification. Now, as chartered accountants, we need to understand that a single supply is very risky owing to this volatility of global tariffs. The China Plus One strategy, that is maintaining a manufacturing base in China and also maintaining another one as an alternative in another country, let's say India, is becoming an attractive option. Consultancy. Supply chain tariff audits. Examining FTA agreements in detail to claim exemptions. These have become high-value services. Certificate of origin compliance, FTA utilization certificates are also routine compliances, but they are becoming really lucrative for clients who are engaged in foreign business. Obviously, if you have studied your CA final syllabus, you have the option of going to the Customs Department for advanced ruling under the Indian Customs Act 1962 for difficult or contentious matters, so that the department doesn't come to you in future raising demands. And finally, monitoring and scenario planning. Given the extraordinary volatility of global trade, we have to monitor closely the global tariffs so that we can take actions accordingly. As Benjamin Franklin once said, when you fail to prepare, you are preparing to fail. That's all what I had to say. Thank you for being such a wonderful audience. And finally, a heartfelt gratitude to SIRC and SICASA Mangaluru for this wonderful opportunity. Thank you so much.
Kindly note, the time taken by Somyadip is 10 minutes, 2 seconds.
Check. Yeah. Thank you so much, Somyadip, for walking us through the impact of global tariffs. Now, since this is a post-lunch session, the audience also wants to have some fun. But I don't know if it is going to be fun for all of y'all because they want me to ask y'all some questions. And based on that, let's see if they enjoy or not. Now, first and foremost, you presented really well. So congratulations to you. I found your PPT to be very creative. Like, you've included a lot of memes and you've made it as creative and fun as possible. So good job with that. And you started with an interactive question. That also was very good. Engaging with your audience is very important. I like how you covered the entire topic in a span of 10 minutes. You went from what are the different types of tariffs. You explained what is tariffs. We definitely have some students, foundation intermediate students for whom it is important to know, because as soon as you saw that many of them did not raise their hands, the first thing you did was explain what is tariff, right? So very well done on that. What is the impact? And with the timeline, you explained that very well. And recent developments that took place, and what are the strategic responses. Okay, I'll ask you two quick questions on what you presented. Now, first and foremost, you spoke about multiple sectors, right? And how they were affected. What, according to you, is the industry that was hit the most because of this tariff among all the sectors that you have mentioned? And is there any specific business that was hit hard? Like any business that you're aware of?
Well, we need to understand that tariffs are not only negative, but they can be positive as well. When tariff was imposed on China, we got an opportunity. But that is one side. The other side, as mentioned by you, we have a negative impact as well. Although I'm not really aware of any specific sector, but what I can think of is probably the manufacturing sector itself, because suddenly when you are importing some goods and the cost increases, the cost is directly proportional to our profits. And if it's not under our control, then obviously we cannot increase the price due to the competition in the markets. So I think the manufacturing sector has to be the one that is the most impacted.
Okay, well answered. Now that you said manufacturing sector, I remember that you spoke about renewable energy and how we want to be self-reliant in this, right? And solar panels and solar cells, we are trying to manufacture on our own in our country. It was part of our annual budget also. And we are spending quite a huge amount this time on trying to be self-reliant in this industry. Now, when it comes to the solar panels, we should have been self-reliant in this particular industry nearly, say, 10, 15 years ago. We are much behind, right? Now, do you think these tariffs have an impact and it could delay this by, say, another 10 years? Or when is it that we are going to be self-reliable when it comes to renewable energy because of the impact of tariffs that are there?
So firstly, as regards the impact of tariffs, I have been a personal experiencer of this, because my father worked in the solar industry, and actually his company had to be shut down because the major part of the product was imported from China, and the increased cost made the business unprofitable. So as regards India's competence in this sector, we need to focus more on R&D. We see how less amount that we spend on R&D in our country and how much more on freebies. So we just need to refocus so that we can quicken the process. Thank you.
Okay, well answered once again. Last question, a very general question. Now you gave the strategic responses that could be adopted in these situations. But I want to know now, since 2025, what businesses have actually done to cope up with tariff?
Again, I'm just taking a wild guess. Well, what I can think of is the China plus one strategy that I've already mentioned, that is maintaining a base in China and another alternative supplier. Another thing that they could have done is that increasing their domestic or in-house production capabilities. This takes a lot of capital expenditure, but in the long run, it can be beneficial for the business to be self-reliant.
Okay, thank you for your answer. One more point I would like to add. Now, I have also done many presentations, paper presentations, if I have to say. And one thing I look forward to is the session chairperson's feedback on what I can improve. So I would like to voluntarily give that to you. You can use the stage more, is what I personally felt. Okay, I was already instructed by my friend C.A. Shashidhar Pai, don't tell anything negative. But just one suggestion from my end to you. Please use the stage more next time. You spoke really well. Thank you so much, Somyadip.
Thank you so much, sir. Thank you so much. Will be noted. Thank you so much.
Thank you, Somyadip, for that insightful presentation. We shall now move forward to the next presentation. Over to you, Ms. Chrisanne Monis.
Imagine you run a business. You buy goods, you make the payment to the supplier, including GST. You have received a proper invoice, you have filed your returns, you do everything right. And then the GST department says, sorry, your ITC is denied. Not because you did anything wrong, but because the supplier did not deposit that GST with the government. My name is Chrisanne Monis. I'm an article assistant at Nitinjay Shetty & Co. Bangalore. I'm super glad to be presenting here at the CA Students National Conference. My topic for today is common ITC disputes and how courts are deciding them. Before GST, India had a serious problem, tax on tax. Every stage of the supply chain paid tax on top of the previous stage's tax. Prices were rising. Businesses suffered. GST was introduced on 1st July 2017 to fix this problem. ITC was a mechanism to prevent the cascading of taxation. One unified system, seamless credit flow, no more cascading of taxes. ITC was considered as a philosophical heart of GST. It was not a bonus feature. The CGST Bill's own statement of objects called ITC the mechanism to broad-base the credit system across the supply chain. Section 16, subsection 2 of the CGST Act lays down 6 conditions for claiming ITC. All 6 together miss one and the credit is gone. The first one, valid tax invoice or debit note from a registered supplier. The invoice details must be filed by the supplier in GSTR 1 and that must reflect in the buyer's GSTR 2B. The buyer must have actually received the goods or services. ITC must not be restricted under Section 38. Look at the last one. Buyer has filed his own return under Section 39 in GSTR 3B. Now look at the clause C. Tax has been actually paid to the government by the supplier. Not you, by somebody else. Someone you cannot control. This is today's core battleground. Why is clause C uniquely problematic? Look at the first 2 points. Suppliers 3B is confidential. Buyers cannot access it. See, filing returns and paying is different. You cannot see the supplier's payment. The buyer has already paid the GST. It is embedded in the invoice price. The money is gone. And the last point, the law demands something beyond the buyer's control. There is a Latin maxim for this. Lex non cogit ad impossibilia. It means the law cannot compel to do the impossible. This very exact situation was faced in the Maruti Enterprise versus Union of India in May 2026. 60 plus writ petitions by Gujarat businesses, they all had the same problem. They were denied ITC because the suppliers failed to deposit GST. They put forward 4 constitutional arguments. Article 14. Honest buyers and fraudsters are treated the same. This is unconstitutional. Article 265. Denying ITC is double taxation. There is no legal sanction for this. Article 19, subsection 1, clause G. Less restrictive alternatives exist. You need to deny ITC to the buyers who knew about the fraud. Article 300A. Retrospective reversal over these many years is simply property deprivation. This was backed by the Guwahati, Karnataka, Tripura, etc. decisions, where they read down Section 16, subsection 2, clause C and supported honest buyers. But the revenue, it argued, it said the ITC is a statutory concession. It is not a right. There is Section 41, subsection 2. The denial is temporary, it is not permanent. There is Rule 37A, where it gives you a time limit of up to 30th November of the next financial year. Section 155 says the burden of proof of ITC eligibility lies on the buyer. And then there is Section 53, interstate credit transfers. States will have to transfer the credit that they never received. And Section 16, subsection 2, if it is read down, then the whole GST architecture will collapse. 2 strong set of arguments. Who won? The Gujarat High Court upheld Section 16, subsection 2, clause C. It declined to read it down. It said that the courts which had read down Section 16, subsection 2, clause C did not go through the sections 41, subsection 2, 53 and 155, which were provisions which were unique to GST and not the same as the old VAT laws. The denial is temporary and not permanent. ITC can be re-availed once the supplier actually pays. It also said that the Axel-Kittel principle must be followed. Where the buyer knew or ought to have known a fraud, there itself the ITC must have been denied, and not any other time. But it also said that the Parliament's job is to codify this, and not theirs. The law is valid, but the gap between the legal validity and commercial interpretation, that is not their job, it is the Parliament's. Now we are looking at a company which won but had the victory taken over. The Safari Retreats. Now Safari Retreats built a shopping mall. They paid 34 crores GST on construction and they claimed ITC. The GST department refused. They said Section 17, subsection 5 blocks ITC on construction of immobile property. They went to the Odisha High Court. It ruled in Safari's favor. Denying ITC on a mall that generates rental income recreates cascading taxation, and this defeats GST's own purpose. Supreme Court in October 2024 said, if immobile property is being built to make taxable rental supplies, Then blocking ITC will reintroduce cascading. It said it derived a functional use test. It said you need to have a purposive reading of plant or machinery in section 17 subsection 5 clause D. The matter was remanded. But before this could be looked into, the Finance Act 2025 replaced plant or machinery with plant and machinery retrospectively from 1st July 2017. And that word or which the Supreme Court had relied upon, it was gone. The Safari's victory was undone. Other recurring ITC disputes, 180-day payment rule. The buyer must pay supplier within 180 days or reverse ITC with interest. Government contracting, the payment period, the credit period is 9 months. There are disputes in partial payments and amended invoices. GSTR 2B mismatch. See, the ITC is restricted to GSTR 2B. If the supplier did not file GSTR 1, how are you supposed to claim this credit, right? And this affects small businesses. Section 16, subsection 4, time limit. If you don't claim within 30th November, then the ITC is gone. In GST's earlier 4 years, there was problem with the GST portal. It kept crashing. And that's why section 16, subsection 5 gave a partial relief. But now this gives scope for fresh litigation. Now you can see two schools of judicial thought, strict school and the purposive school. Gujarat High Court in Maruti Enterprise said, ITC is a statutory concession. Revenue is supreme, it comes over, and the buyer bears the risk of the supplier's default. Purposive school. The Supreme Court in Safari Retreat said, ITC is a philosophical heart of GST, bona fide buyers should be protected, and you need to read the law in context of what it intends to achieve. So looking to these two schools of judicial thought, GST was built to eliminate cascading taxation. But 9 years later, the promise is partially kept. The Parliament has failed to address two questions. What is the mechanism when the payments are made through DRC 03? What to do with the ITC then? Can you claim it? How are you supposed to verify this payment made via DRC 03? What about the cases when the supplier becomes insolvent? How to claim the ITC that you never got? Three cases that the Parliament has to look into. It has to define due diligence. What does the buyer need to do to make sure that he is bona fide? The good faith buyers must be protected. There has to be statutory protection where buyer had no knowledge and no means of knowing the supplier's default. The Axel Kittel standard must be followed. Action against defaulters. You must prioritize recovery against the defaulting suppliers, not the innocent party who is the innocent buyer. GST was built to eliminate cascading of taxes. And elimination is not possible if enforcement is not matched with fairness. Thank you.
Thank you, Chrisanne, for that wonderful presentation.
Kindly note, the time taken by Chrisanne is 9 minutes 54 seconds.
Okay, so till she comes, I will just tell you, common ITC disputes. My God, my favorite topic. Definitely, because the amount of research that you need to put on this topic, ever since 2017, even till today, and I know for the next n number of years, we will be having this ITC disputes, right? And case laws keep coming, different interpretations, different courts are dealing with them differently. A lot of chaos is happening around this topic. And since I personally work in GST litigation, I keep reading on these and everybody is so confused. So hats off to you for choosing this topic and presenting it so well. So please give a round of applause. She very well explained between two major case laws. Now, definitely one is Safari Retreats and the other being Maruti Enterprises, right? Now, the question, seamless flow of ITC, is it a myth? Do you all think there is seamless flow of ITC? This is a very debatable topic, definitely. Now, I like how you included the two very relevant case laws and did not just add a lot of them, because that would just create more confusion. Now, you spoke about Maruti Enterprises, so let's start with Maruti Enterprises itself. Now, in the unaddressed question, right, she very well pointed out that when the supplier pays the tax other than 3B, what is the solution? Now, I will explain it in a little more detail because I had anyways thought of covering it. Now, let me give you an instant. Now, you're a recipient. You're paying tax to the supplier. The supplier files his GSTR 1 but fails to file his GSTR 3B. Now, you are following all the other conditions under 16 subsection 2. That is, you have paid the tax. It has come in your 2B. You have a tax invoice, correct? You're filing returns under section 39, okay? And one condition, that is 16(2)(c), okay? Now, currently, there is no mechanism for you to find out whether at that point of time when you are filing your 3B returns, whether that person has duly deposited the tax or not. Okay, no issues. Now, let us assume that the particular supplier has not filed his return of income. But however, there were subsequent departmental proceedings and he decided that he will pay this particular tax in DRC 03. Now 16(2)(c) is fulfilled for me because why? The supplier has paid the tax to the government has got the tax. The only thing is it has not gone through the route of 39, that is through your GSTR 3B. It has got through DRC 03. But is there any mechanism in GST wherein the recipient will get to know that the tax on that particular transaction has been deposited through DRC 03? That mechanism is still not there. I was very impressed with the inclusion of that. However, when it comes to these judgments that are there, no? Students, do you think that whatever judgments are being passed, okay, these are always right? Can there be wrong judgments? Yes? Yes, there definitely can be wrong judgments. And even Gujarat High Court in this case of Maruti Enterprises, no? They have missed on quite a few things. So let me first hear from Chrisanne. Chrisanne, are you aware of what should have also been included when this judgment was passed so that it could have been a speaking order on all the aspects?
Firstly, the DRC 03 payments, they should have included that as well. Then secondly, see, 41 subsection 2 was introduced in October 2022. So prior to that, there was no section which allowed them to reverse and reclaim ITC. So they should have given an explanation for what to do in that scenario, like prior to October 2022. Also, they should have given some remedy to the buyers on how to show that they are like bona fide and how to protect themselves. See, contractual agreement can be drawn up, but they have to give more clarity on what they can put into a contractual agreement and how it will actually prove the due diligence. Yeah, that's it.
Okay. So first thing she said is, now in this Maruti Enterprises judgment, no students, what was told is that your section 16(2)(c) cannot be read alone. It has to be read with 41 subsection 2. Right? Now 41 subsection 2 came in effect from 1st October 2022. So now what can we do in cases of transactions before 1st October 2022? Can we assume that 16(2)(c) can be read alone in that case? Yes or no? Now, that is another question for you to think about. Now, one more recommendation that the court gave to the department or to the buyers or to the recipients and suppliers is that you have an agreement. You have an agreement that if at all the supplier does not pay the tax to the government, the supplier is liable to indemnify the recipient. Now, a particular recipient or a supplier may have transactions with n number of other GST registered taxpayers. And most of them in the case may be a one-time transaction. Okay, and we cannot go making agreements with such parties every time. So we have to see what is a practical aspect of the recommendation given by the Gujarat High Court in this case, because it is not at all practical. Now, if you are supplying to 500 recipients, you cannot make 500 agreements, and these 500 may not be your recurring recipients also in this case, right? So though it is a recommendation given by the Gujarat High Court, it is not a very practical one. Now, let's go to the next case law that you discussed, that is safari retreats, right? Now, in safari retreats, there was an interpretation dispute, right? And the interpretation dispute was between the word plant and machinery and plant or machinery, right? Very well. But why did the Honorable Supreme Court decide that the word plant or machinery in this case cannot be read as plant and machinery? Can you throw some light on that?
There are two subsections actually, 17 subsection 5 clause C and 17 subsection 5 clause D. In 17 subsection 5 clause C, the Parliament has specifically mentioned plant and machinery. But in the clause D, they have not mentioned plant and machinery, they have mentioned plant or machinery. So what the Supreme Court said, that the Parliament has thought about it and has kept it on deliberately. And that's why it said that if you look at it, if you have a commercial interpretation, then the shopping mall can actually fall under the definition of plant. And that's why the matter was remanded, and they considered this and gave the judgment.
That's exactly how it was interpreted. Very well answered. Now, I will add on to that. Now, what happened in this case was the Honorable Court said that there are 10 places where plant and machinery is used in chapter 5 and 6. Now, when plant and machinery is used 10 times and only once, that is in 17.5D, it is plant or machinery, it is contended to be deliberate. Now, there is one more add-on point which added weightage to this. Now, before the GST Act or the CGST, SGST Act came into place, there was a GST manual that was circulated. So when this manual was circulated, 17.5C, 17.5D, both had the word plant and machinery. Okay? But later, when the Act came into place, 17.5D had plant or machinery. So the court held that when the manual and the actual Act has a difference, okay, when it was changed from plant and machinery to plant or machinery, the change is intentional, and that is why the case was passed in favor of safari retreats. Thank you so much, Chrisanne. You answered the questions very well. Good presentation.
Thank you.
Thank you, Chrisanne, for sharing those valuable insights. I now invite our next paper presenter, Mr. Preetham U, to take the stage.
We are living in an era where digital transactions and cross-border transactions play a very important role in the world's economy. Good afternoon to each and every one of you. Myself Preetham, and I'm doing my articleship in Kamatenko, Udupi. I'll be presenting on the topic GST on cross-border transactions and digital services. First, let's get to what are cross-border transactions. So, if there is a supply of goods or service between two people who are located in different countries, that's called as cross-border transactions. So there are a few, the common types of cross-border transactions are imports, exports, and remittances. So I'll be mainly focusing on imports and exports. So let's get to first export of goods. So as per GST Act, the supply of goods will be classified as export of goods if goods are taken out of India to a place outside India. Exports are normally considered as a zero-rated supply. And while preparing GSTR1, export sales are, can be shown in two different ways. One is without payment of GST, second with payment of GST. So first, when it comes to without payment of tax, so you'll just report the export sales by choosing this option. There's no need to pay IGST. And the only requirement to use this option is to file letter of undertaking. Now, when it comes to export with payment of GST, first IGST will be paid on that sales, and then refund will be claimed. Now, in both of these cases, refund can be claimed on unutilized ITC that's lying in their electronic credit ledger. Now, let's get to the import of goods. In case of import of goods, importer has to pay IGST before clearing the goods from the customs. And then while he is preparing his GSTR 3B, he can claim the ITC on the import of the IGST that was paid before he had cleared the goods from the customs. This ITC will be auto-populated in GSTR 2B. Now, there are certain transactions that government has notified as deemed exports. That is, even if the goods do not leave India, they'll be considered as exports. So, following are the transactions which are considered as deemed exports. First is supply to an export-oriented unit. Export-oriented unit basically is an entity which exports basically entirety of its productions. So if ever there is any supply to an export-oriented unit, then it will be called as deemed export. Next, supply against advanced authorization. So advanced authorization is a license where import of raw material can be done duty-free, but that has to be incorporated in the product that is to be exported. So if there is any supply of goods that is done to a holder of advanced authorization license, then this will be considered as deemed export. Now, in case of EPCG license holder, here capital goods can be imported at a concessional duty. So if there is any supply which is done to a person holding EPCG license, then that will be called as deemed export. And if there is any supply which is done to UN or foreign embassies, even that will be considered as deemed export. Now, in case of export of services, there are 5 conditions for a transaction to be export of service. So I'll take a scenario, I'll create a scenario to explain all these 5 conditions. Let's say Somyadip is a tax consultant who has a place of business in Guwahati, Assam. And he has provided me consultancy services. Let's say I'm located in USA. And I have paid him, let's say, $500. So let's get to the first condition. Supplier, Somyadip, he is located in India. Correct. Next, recipient, that is me, is located outside India. Now, place of supply. As per Section 13, now Section 13 of IGST Act covers transactions where either supplier or recipient is located outside India. So, as per Section 13 of IGST Act, the general rule is place of supply is the location of the recipient. So, in this case, my location, US, is the place of supply. So, next one is payment should be done in convertible foreign exchange. I have paid him in $500. And now, supplier and recipient should not be establishments of distinct person. So, distinct person means there are 2 separate GST registration, but under the same PAN. Right. So, even in case of export of service, it's similar to how we show export of goods. Either show it as without payment of tax or with payment of tax. With payment of tax, claim refund on the IGST that is paid. And in both of the cases, claim refund on the unutilized ITC. So, refund must be processed within 60 days from the date of application. Now, let's move on to import of services. So, simple rule regarding import of service is that the recipient of service must pay GST on RCM basis. So, there are few conditions for a service to be import of service. First is the location of the supplier should be outside India. The location of recipient should be in India. And if the recipient is a registered person, then he has to pay RCM. Now let's move on to digital service. So the main contributor to the digital transaction nowadays is OIDA service, that is Online Information Database Access Retrieval Services. So these are basically provided through internet or electronically with a very minimal human intervention. Now what qualifies as OIDA? For example, let's take online digital content platforms like Netflix, Hotstar, Spotify, or cloud services like Google Cloud, app stores like Play Store, then edtech apps like the Unacademy, then software as service as Adobe, and digital advertising like the Google Ads. Now, let's move on to provisions related to who will pay the tax in case of OIDA services. Now, if an OIDA service is provided to a B2B recipient, that means a registered person, then he has to pay GST on RCM basis, 18% IGST on the transaction value. Now, if it is a B2C, then the normally it's the tax is paid on forward charge mechanism basis. Now there is another case where, which is actually a very common one, is when the OIDA's supplier is located in a non-taxable territory. So in this case, the Section 14 of IGST Act says that the supplier of service must pay IGST. That is, in case the supplier is located in a non-taxable territory and the services is given to an unregistered person. Now there is another provision relating to this. So I'll create another scenario for this. So let's say Donald Trump. He has created a online streaming platform of movies or TV series. So he's running that right now. And he's taking help of, let's say, Netanyahu for like advertising in India regarding his app. Now, here his main target audience, let's say, all are unregistered person. Now, here, Netanyahu is acting as an intermediary between Trump and the end consumer. So here, the intermediary will be deemed to be the supplier of service, and he has to pay the GST. So now, one might be wondering, how can the foreign supplier can pay IGST in India? So all foreign order suppliers, they are mandated to take a GST registration, a single registration and a simplified registration scheme. Now, there are a few conditions, exceptions to the intermediary rule that I have provided earlier. That is, if in invoice it is clearly mentioned the name of the supplier, if the supplier is fully responsible for the arranging terms and conditions. Now, regarding place of supply, I'll say it in short. Basically, general rule is that the location of the recipient will be the place of supply in case either supply or recipient is outside India. There are a few exceptions, like if in case of service relating to immovable property, that time the location of immovable property will be the place of supply. So thank you everyone for listening to my session very patiently.
Thank you so much, Preetham, for that wonderful presentation. Due to shortage of time, he will not be able to give you all any key takeaways from his presentation. But no issues, we will cover it in our questions, definitely. Now, as an educator myself, I would like to give you a suggestion that definitely you should get into teaching, because I love how you simplified everything and taught them from the basics of imports and exports, place of supply, very well explained. So you should definitely consider teaching once you qualify, right? Yes. Now, poor Somyadip, you made him a tax consultant. I hope you meant as a CA in practice and not just a GST practitioner. Anyways, and you said in that very transaction about being in US, so that reminded me of this concept of intermediary services. Now, recently there are a lot of developments happening. There was a change also. So can you throw some light on that?
Yeah, so in case of intermediary services, earlier the place of supply was the location of the supplier. And in the recent Finance Bill 2026, there was an amendment. So they made amendment to that subsection. In that subsection, they have given 3 services where the place of supply will be the location of supplier. One of them was intermediary services. So in the Finance Bill 2026, they have removed intermediary services from that subsection. So in this case, the place of supply, if ever there's in case of intermediate services, will be the location of recipient. That's the general rule.
Yes, it is now coming under the general rule. Now this is coming out because of the impact of a judgment. Do you know which judgment is that? It was passed by the Honorable Supreme Court?
I'm not.
Okay, so it is KC Overseas Education. Okay, this is what brought the impact on this intermediary services. Okay, now there was a major dispute whether it was export of services or not. Okay, so they were contending that it is export of services, and the Supreme Court also ruled in their favor that this is on a principle-to-principle basis. It is a good read for y'all. I will not walk y'all through the case law because of shortage of time. Okay, and one more question now, since you spoke about import of services and mentioned that reverse charge mechanism is applicable. Right? Now, when it is a case of import of services, I am paying tax under reverse charge basis and claiming ITC on it. Now, this is a revenue neutral exercise, right? So, how is it benefiting the department? Why is there a need to pay reverse charge mechanism or pay the tax under reverse charge mechanism when it comes to import of services? What is your opinion on this? Because it is a revenue neutral exercise, right? What is the need for it? You can give your opinion. It may be right, it may be wrong, because we don't know why the government is doing it. There are certain reasons, but what according to you is it?
I think it's just, in my opinion, it might sound a bit silly, but it's probably just like another way to tax on the import of services. Like in case of import of goods, now when the goods are in the clearance, that time they make them pay IGST. That cannot be done for like the services, so they do it in this RCM basis.
Correct. You are saying that they want to tax, but they are not. The department is not earning any revenue from it, right? Because subsequently the ITC is claimed by the same person. I am only paying the tax and I am only taking a credit of it. So is there any benefit deriving out of this to the taxpayer or to the department?
To be fair, I guess this is applicable to all RCM provisions, right? Because when we claim RCM, then when we pay RCM and we claim credit on that. So
yeah, but for other provisions, there are actual reasons, like for instance, on renting. Previously, there was no track of unregistered persons giving properties, commercial properties out on rent. And in order to see if their turnover is actually crossing the threshold, it was implemented or added on later. But in the case of import of services, you will have to read upon it, right? Yes, okay. Thank you, Preetham.
Kindly note, the time taken by Preetham is 10 minutes and 47 seconds.
Thank you, Preetham, for that excellent presentation. I now invite our final presenter, Ms. Mizbha Nayab, to take over the stage.
Now, before I begin, I want to ask you a small question. How many of y'all have ordered something online in the last month? So I assume 90% of the people would have done that. So now imagine, what if a package gets stuck at the border for 10 days? Six departments and same time you have to submit the document again and again. Not very long ago, this was the reality of international trade. 40 documents, 9 government agencies, weeks of waiting. Traders just didn't anticipate the delay. They budgeted for it. And then technology walked in and asked, why are we doing it this way? Papers became digital, counters became portals, and random check-ins became data-driven decisions. Good morning, everyone. I am Mizbha Nayab. I am here to present on the topic, role of technology in trade and customs. So let's talk numbers. In 2025, the global trade has hit 34.65 trillion, Goods grew 6% and services grew even faster at the rate of 8%. And the services make up to 27.6% of all global trade, highest since 2005. The world is trading more than ever. Technology in trade isn't just luxury. It is what that makes the 34.65 trillion running. Technology isn't the future of trade, it is already in the present. Now, how did customs go digital? Now let's imagine you book a ticket. Now the data goes to the airline, immigration, and the services all at once. You don't have to file a separate form each time. That's what electronic data interchange did to the customs. Traders exchange the data electronically. No manual submissions, no physical contact. And then through Turant Customs program, the importers filed the bill of entry documents before even the ship docks at the port. Now next, how is this possible? What platforms make this possible? So it is IceGate. So in IceGate, before IceGate was arrived, importer used to go to the custom office with a stack of documents and then wait. Today, everything is being filed digitally. So online bills of entry and real-time tracking. You can do 24/7, you get help desk, no queues and no counters. Now, IceGate wasn't enough. Because after the shipment was filed, the shipment required approvals from different departments, from multiple government agencies. Now, how is this possible? That's where SWIFT stepped in. Now, what is SWIFT? What SWIFT does? SWIFT integrates all the 9 separate forms into one integrated declaration. So you don't have to wait till the other form gets approved. All this is done parallel. Now, next. Now imagine that you are in the airport. You are in the airport security check. Not everyone gets a thorough baggage check, right? So few gets document check, and few are just cleared directly, and few people maybe have to step aside for a thorough documentation and other check inspections. So that's where RMS stepped in. So what RMS does, when the bills are filed in the IceGate, the bills directly goes to the RMS portal, and RMS analyzes the data and decides whether this needs a full inspection or document check, or it can be cleared directly. So we know that AI has been taking over all things. So today we use AI every day. Swiggy tells you what you want to eat next, and Spotify tells you what you want to hear next. And bank flags unusual transactions before you even notice it. So what AI does, basically the AI stepped into customs. And when the major problem in trade was undervaluation, the major risk. So in undervaluation, goods were shown at a cheaper price so that you avoid to pay duty. So when undervaluation is, the AI steps in and checks all the transactions, and it checks all the historical transactions and shows if it is valid or not. And next, AI doesn't check every good physically. It uses X-ray images to analyze the data. Now, AI helps with the fraud, but what about trust? Now, imagine you're splitting a bill with your friend. Not everyone remembers it correctly, and there comes dispute. That's how international trading system also works, but massive. Exporters have one document, custom officers another document, bankers have another different document. So there is lot of disputes. There are 4 other documents which rarely match. That's where blockchain steps in. And when blockchain steps in, it has one single ledger, and no one can tamper the ledger. So everyone can see it, and it is accessible. So, and the certificate of origin gets verified instantly. Next. So next is IoT. So when blockchain makes the records trustworthy, what about the physical goods? So one container goes from Mumbai to Chennai. Then how is that assured that there is no tampering being done in that physical goods? So that's where IoT steps in. GPS seals, RFID antennas, license plate, all this help to scan the goods and reach it safely. And moreover, Malaysian Smart Cargo clears the container in under 1 minute. What about India? What has India done? We have spoken all globally, but what has India done? India has introduced faceless assessment in 2020, which directly sends the declaration forms to the custom officers sitting anywhere in the country. There is no face-to-face transaction. There is no corruption involved. And then comes the Gati Shakti, GPS-enabled portal where it includes the digital map for ports, railways, and roads, which also helps to cut costs. So we have seen all this, but everywhere there are challenges and risks. It is not smooth. So though we have challenges and risks, we have seen from 6 departments, 6 applications to where the cargo gets cleared under 1 minute. So though there are challenges, there is also progress. So technology didn't just speed up the trade, it made the whole system fairer, faster for everyone. Thank you.
Thank you, Mizbha. And good evening once again. So, you know why I said good evening, right?
I know.
Yes. Okay. Now, I like how you started with a question and how you have beautifully covered the technological impacts on trade and customs. I will come directly to the question. Now, you spoke about faceless assessments or faceless clearance, right? Now, do you think these faceless clearance that they have introduced, it has reduced the role of a CA when it comes to trade and customs?
So, though AI has been introduced, but I don't think it can replace the role of a CA. It can make the work easier, but I think it is
No,
not
I'm not talking about AI. I'm talking about, you mentioned faceless clearances happening, right, at the port. Right. So do you think that has reduced the role of CAs?
I think it has reduced the workload, but not replaced CAs as you asked.
Okay, so workload is reduced, but are CAs still required for that?
Yes, I would say yes.
Yes, okay, maybe. Okay. Now, one reform that you would recommend for India, for Indian trade and customs, and why would you recommend that?
Can you repeat it?
Now, for trade and customs in India, if there is one reform that you would like to recommend, what would it be? A reform, anything that you would like to change about the current practices that are happening.
So as I mentioned in the presentation as well regarding the Malaysian cargo, which it gets cleared in 1 minute. So I would recommend the same thing to be implemented in India.
Okay, and how can we implement it in India? Like, what are the changes that would be required in terms of trade and customs? Any clue? No. Okay. Have you used the IceGate portal? No. Have you gone through it, at least during your presentation? Yes. Now, if you have to say IceGate, no. Now, GST and income tax only we struggle when it comes to due date. IceGate, I can say, is still much behind, right? And since you were covering role of technology in trade and customs, do you think that these portals need to be revamped or redone and in a way that it can help the users? And how can it be done?
It would require Yes, it would require to revamp and redone and...
Okay, thank you.
Kindly note, the time taken by Mizbha is 7 minutes 13 seconds.
Thank you, Mizbha, for that wonderful presentation. With this, we come to the conclusion of the paper presentations. Please join me once again in appreciating all our paper presenters for their insightful contribution and commendable efforts throughout this session with a huge round of applause. Every insightful discussion becomes more meaningful with expert guidance and perspective. With that, I now invite CA Joystan Dsouza to share his thoughts and feedbacks on today's session.
Now, you all have already heard me giving my feedback and review, but I'll just add on for a couple of minutes so that I can get some good photos on the podium as well, right? Yes. So first and foremost, congratulations to all four of you. You all spoke really well. And getting selected in a conference where we have more than 120 paper presentations is really a great achievement. So kudos to you guys for taking the initiative to take part in this paper presentation. Please give a round of applause for them. Now, I feel very happy seeing them because just 2 years ago, I had presented on this very stage as an inter-student, and coming here, I did not expect that so soon I would get the opportunity to come as a session chairperson. And one more thing is I'm happy because there are 2 students from Udupi. It is my hometown, so I'm very happy that even the students of Udupi are here in Mangalore and presenting their papers. So congratulations to you guys as well. Little word of advice for everyone. Now today morning also, a few of you all wanted certain tips on how you can speak better. You know, and BB sir, like he rightly said, you know, you should take the initiative to do it today, because if you keep planning, then it will never happen. So there are a lot of opportunities now, and it is a proud moment for SICASA Mangalore that we got to host the first national conference of this season in India. So there are multiple more conferences coming up. So just take the effort, because effort is what it takes for you to be on this stage. Now, it is not an easy journey, right? From selecting the topic. First of all, when you see the invite, you will think, which topics should I select? And I know this current generation, what you all do, you all ask AI to select it for you, okay? Don't do that. Pick something that you are really interested in, because now, once you qualify also in the future, you need to know what you're interested in, what you want to do. So, if at all you have that thought clear in your mind, you will be able to select a paper that you would like to present. And if it is something that you're passionate about, it is very easy for you to do the research. And you will feel confident speaking on that particular topic as well. So I really urge all of you all that please try and put or submit papers. It takes a little bit time, like you have to make a video, you have to make a presentation, you have to prepare yourself to stand on the stage and face such a large crowd, right? But the happiness that you will experience after presenting your paper, it is unexplained. I cannot explain it at the moment. Now, coming to the presentations, I saw that you guys did your research very well, okay? Now, GST is something I love, and I like to keep reading on GST, and you people have done thorough research, okay? What recommendations I would like to give you all is that whenever you're making your PPTs or even you're submitting your research papers, try and avoid the usage of AI, okay? Now, some images, definitely AI can help you, but you never know what impact it has on the session chairperson or the person evaluating your papers, because a lot of students, they had good content, but their papers had a lot of AI generated content, okay? So place less reliance on AI. I think I'm the first person who might be saying this in this conference, but try and focus more on doing the research by yourself. You can utilize AI to enhance your paper, or find out if you have made any clerical errors or if there are any mistakes that you have made in the particular paper. So with this, I would like to wish all of you the very best, and I look forward to seeing many more paper presenters from this audience. Take inspiration from all of them. Thank you so much. Thank you to SICASA Mangaluru for the opportunity.
Thank you so much, sir, for your valuable insights and encouraging words. I now request CAB Shashidhar Pai to hand over a token of gratitude to our respected chairperson and the paper presenters.